Welcome everybody to AIM's APAC REIT's full year 24 results, and I will describe the results as rock solid. I have a pretty strong holding of this REIT in my portfolio, so I'm a very vested investor. So this is the share price performance for last year. You can see that it has collapsed from 1.4 to 1.25, 1.26, 1.27 currently. It has collapsed to 1.18 or something during November last year when they did the EFR. I'm very happy to say I participate in the EFR in full. I subscribed for access, and subsequently I bought more when the price dipped below the EFR and some more above the EFR. I was very happy to accumulate this REIT. I was extremely happy. The market was extremely stupid to sell this stuff at such a cheap price. So this forms 10% of my REITs portfolio, and my REITs portfolio is around 40% of my REITs overall portfolio currently. For followers of this channel, you should know I sold quite a bunch of REITs earlier this year. I sold my iREITs. I sold off a huge portion of my ESR REIT. I sold my Capital REIT and a bunch of the office REITs. So currently, this is still a pretty big a percentage in terms of weightage in my REITs portfolio. I'm pretty happy with it actually. Over here I received one round of distributions. Over here I received another round of distributions. I'm a pretty happy chap. This is the summary of the results, and pretty good actually. DPU for the year 9.36, down from 6%, down by 6%. But in my notes, I actually expected the full year DPU to be 9 cents only because of the delay between the date of placement and when the contributions from the capital will kick in. So actually the results was a bit to me actually. So it's pretty much coming from the rental reversions. A very strong 24% rental reversion for the year. This follow up from last year's 18%, which is even higher compared to the year before of like 7 to 8%. So you can see it's a full 3-year consecutively that they have positive rental reversions, and it's going from 8% to 18 to 24. So I think the properties are really doing very well. Very good job to the manager. I think they've managed this portfolio extremely well, which is something I cannot say for all industrial managers. You know what I mean if you know what I mean. This is the average gearing of this REIT, and now 32% only, down from 36%. Very very well capitalized after the EFR they done last year. Unfortunately, the debt maturity has come down. And the fixed rate borrowing has come down. So going forward, I think the rising interest rates environment will start to kick in and affect the DPU. So it's something we have to watch out for. Part of it will be arrested though by the rental reversions and the subsequent kick in of the AEIs that they've done. Something to take note of are the two perps they have. One of them, 250 million face, will reset in September 26. So that's like 2.5 years away, so not that much of a concern. But the one of 125 million notional will kick in on the August 25th. So that's like 1.5 years away. So if interest rates stay elevated, this is gonna be a bit of a problem because right now the re-offer rate is 5.65%. So I think if they're gonna like reset this stuff, it's probably gonna be north of like 7%. So which is a bit of a problem. But nonetheless, given the low gearing they have right now, one option is to just redeem this stuff and issue more debt. So that's added optionality that they have. But anyway, 1.5 years is quite a long time in financial markets. You never know what will happen. Maybe there'll be a financial crisis and Fed lowers rates again. I don't know. Overall, I like what they did for the year. Continuing to have positive reversions, continuing to get the long leases with clients, and you can see that they've invested the Yishun industrial property at 8% premium to book, which is very very attractive. Not like some other REITs which have to sell stuff below book. This is still very very well managed, and the assets are still pretty good actually. So if you look at the NAV has dropped to 1.31. But over here you can see 1.31. But you can see the Singapore portfolio has risen in valuation, and the Australian one has not collapsed, dropped by 10%, which is in line with what you see for pretty much all overseas assets, be it the US, Europe, and in China it's even worse. So I think Singapore continues to be a solid, safe harbor. Something very nice to see also is that the industrial portfolio did not fall in valuations. So this is a very, very nice thing to see. If you look at the NAV has dropped to 1.31 from 1.37, but nonetheless, every other metric look pretty decent. A bit of concern is the adjusted ICR to 2.4. due to the presence of the perps. So this is something we have to look for, something we have to look out for. Overall, I think the management outlook is still pretty decent. Especially something new that I haven't seen before is this statement that in Australia, the two business park assets are situated on extensive land parcels within key growth precincts undergoing significant investments. So this is referring to stuff in Macquarie Park and stuff. So I think even access and think of this REIT as having a decent land bank. And once these precincts get more and more economic activities evolving into vibrant hubs, you can probably see some redevelopments of the land parcels and the extensive land they have into more DPU accretive opportunities. So I think this is a pretty decent thing that other REITs don't have, which is a very big chunk of land parcels and land bank. The other REIT that I can think of which have this property is actually CapitaLand India. They have also quite a big bunch of land bank that can redevelop. So I think it's pretty much firing on all fronts. Positive rental reversions, positive DPU aggressive AIs, land banks to do redevelopments and stuff, and a pretty strong balance sheet to weather the high interest rates environment going forward. So I continue to hold on to this REIT very strongly. I don't intend to sell anything, and I'll just continue to collect dividends going forward. So that's it for this video. Hopefully investors of this REIT will be equally optimistic of this future as I am.